Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We're looking at the US dollar index strength of last week, and we're also looking at the Asia Pacific pairs, more importantly for this week's up and coming market outlook. Without further ado guys, let's take a quick look at last week's market. Basically we saw dollar strength once again. This is the dollar index we're looking at here, so a nice chart that tracks the strength of the dollar. And we can see that it's making new highs. Okay, you see the dollar strengthened last week against most major pairs, specifically the Japanese yen and also the Norwegian krone. Okay, so we have to say that the dollar has been showing exceptional strength, but it's not alone. The US equity markets have also been strengthening once again, and you can see that just by looking at last week's Dow Jones and S&P 500. And besides the dollar news, really last week's European news wasn't too exciting either. A little disappointing for investors actually, as the ECB kind of delayed their commitment to adding more stimulus, which is likely to be re-announced in January's meeting. Besides that, obviously Japanese yen continued to weaken again, and that pair is just absolutely unstoppable. If you look at the dollar yen, okay, making more and more highs there on the fundamental and technical levels. Okay, without further ado, we're going to look at the technicals into the coming week. Not so much news coming out, but there is a lot going on. Before we look at the Asia Pacific markets, where most of the news takes place, I want to look at the dollar yen, because we did mention it. We've been looking at this from a monthly perspective here. You can see the swings, the biggest swings are tending to be around 2,600 to 2,800 pips, and then they're reversing a good sort of 40%. Okay, we see the smaller swings that took place tend to be half of that size, so they're about 1,200 pip moves, and then they seem to be retracing not 40%, but rather more like 20%, okay, or 30% at most, okay. And the reason we find this interesting at the moment, you know, given the sort of technicals of this upward momentum, is that the current swing, which is evidently a bullish swing, has moved so far in line with the longer term swings of 2,400 pairs, and they've already moved 2,200 pips. So maximum extent there, we see another 200 pips potentially moving towards the 123, 125 levels, and that would take us very nicely in line with previous resistance areas. I've just circled it here. That was back in 2007, so we're now talking pre-financial crisis, which is very, very interesting. And obviously that level is going to cause a lot of controversy in the markets, and there's going to be more than likely a lot of resistances there. So we're going to now look at the New Zealand dollar pair, guys. Okay, the New Zealand dollar has got some big news coming out in this up and coming week. Okay, before we look at that news, okay, which is connected more to the interest rates, obviously, in the press conference, we just want to look at some of these technicals. Okay, we have basically a very strong base support on this pair. It's just beyond the 0.77 level. Okay, the bearish momentum on here has obviously been very dominant. And right now the maximum upside is around about 0.78. So there's only 100 pips left of that market squeeze right now. That's the daily chart you're looking at. Now let's move to the weekly. We can see this support level of 0.77 is something which has been retested. And if you look back, okay, in July 2013, you can see the same event happening, only it was actually resisted, and we never ever saw that pair broken, so to speak. So will it be broken this time around? That's something which we've yet to confirm, but what we can say is if this 77 level is going to break out, it's going to be sometime soon, because we can see a lot of downward pressure on the market on the weekly candles. Okay, and we can see that if it breaks through this level any time in the next week or two, then December's month will end in the red, so to speak, and we'll see the next support levels that I've just circled here coming in at around 0.74, and that's, you know, a good 300 pips below where we are now, so pretty significant there. Let's move over now, okay, to the USDCHF. we're looking at a daily chart here, and we do have interest rates, okay, the Libor rate in the Swiss economy this week. The US dollar strength here obviously prevailing, and you can see that on your charts quite clearly. But recently the buying power has been a little weaker. We just showed you a wedge pattern there, so squeezing it into a sort of breakout scenario. And we've now moved to a weekly chart where we can see the resistance level here just at the 98.60 mark. Okay, if we see a break from this resistance, then obviously you're going to get a nice risk-reward trade there to go long on this pair. But if it fails to break, as it has done more than twice before now, then we're just going to see this pair continue in the ranging market all the way down to 87, and that would probably take place in 2015's market. And we just want to show you finally, guys, on the monthly level, this pair is obviously threatening to move higher in the long term, and it's very much in line with the dollar strength that we're seeing and the fact that the US look likely to increase rates possibly towards the middle and second half of 2015, and that would all obviously add a lot of momentum to this bullish trade. The pair is still oversold in the long term, so you might want to keep a very close eye on that position, possibly more than any of the others we've discussed in this week's market. Okay, well, without further ado, quick recap, guys, in case you don't get your own heads up on the fundamentals to come this week. We do have a lot of news coming out towards the center of the week, but generally it's quite quiet out there, and obviously volumes are starting to cut back now as we move towards the Christmas holidays. Okay, the main news is the obvious interest rates in New Zealand and then in Switzerland. That's on Thursday. But also on Thursday you have the LTRO targets in the Eurozone, which is basically a very good indicator as to how much, in terms of asset purchases, okay, the ECB are getting involved in order to prop up and bolster European banks. And last but not least, Friday's preliminary consumer sentiment is very important for the dollar market, the US being a consumer-driven economy, and so that will also have a knock-on effect and links back nicely to the dollar index chart we looked at the beginning of this review. So have a great week, guys, and trade safe.